Hello everyone, welcome back to another video. If you are new to this channel, my name is Farhan and I help accounting students like you ace their exams. In today's lesson, you will learn to prepare the allowance for impairment of trade receivables ledger account for multiple years. You will also understand the relevant journal entries that help in the construction of this ledger account correctly. You can see the question on the left hand side of your screen, and on the right hand side we have got all the workings which I'll explain and go through step by step. What I need you to do now is focus and follow through for an excellent understanding. With that being said, let's begin. Lorry Trading's financial year ends on 31 March. So based on this first sentence, we understand that we are working with a business where the financial year starts on 1 April and ends on 31 March of the following year. We are given some information relevant to this business's trade receivables, and we have got information for 3 different financial years ending 31 March 2015, 31 March 2016, and 31 March 2017. We know the amount of trade receivables for each of these 3 different financial years, and also the debts which are unlikely to be collectible for each of these 3 different financial years. We have been provided with some additional information. We need to incorporate this as part of our workings. And the first requirement is to prepare the journal entries for the transactions that occurred on 12th of January 2017, which is basically referring to additional information number 4. So additional information number 4 states that on 12th of January 2017, Wonder Corporation managed to pay $0.30 for every dollar it owed, and the remaining debt was written off. In other words, Wonder Corporation paid 30% of what it originally owed. So based on the table which we were given, Wonder Corporation owed us $900 at 31st of March 2016. And we already knew at this point in time that this could be potentially not collectible, right? So now based on this additional information number 4, we understand that we are going to collect 30% of this amount. Okay, so we are going to be collecting 30% of 900, which is basically $270. So let's look into the workings on the right hand side. So on the 12th of Jan 2017, we understand we will receive $270, and this $270 which we will receive will increase the balance of our bank account. Now, bank account is an asset account. When assets go up in value, we debit them. Therefore, we debit the cash at bank account by $270 to reflect that increase. Now, at the same time, because we know that $630, which is remaining after $270 have been received, how do we get 600? So 900 being the original amount minus 270, which we have already received, we are now left with $630. So this $630 is a guaranteed confirmation that we are not going to receive, right? Which will end up reducing the allowance for impairment of trade receivables balance that we already have. We know allowance for impairment of trade receivables in itself is a contra asset account, which means when it increases, we credit it. But now that we have got confirmation from Wonder Corporation that they're unable to pay $630 of the original amount which they owed us, this means the possible amount which we have kept aside in our allowance for impairment of trade receivables account originally will now need to go down in value because we have got this confirmation. So we understand that allowance for impairment, when it increases, we credit it. Now that it is going down in value due to the confirmation from Wonder Corporation, we have to debit it. So that is why we are debiting allowance for impairment of trade receivables by $630. So both these debit entries combined gives us a total of $900, which basically refers to the entire amount for Wonder Corporation as a trade receivables that we need to reduce from our books. Now, trade receivables in itself is a current asset account. Now that Wonder Corporation has confirmed us that they are unable to pay us the 630, after paying us the 270, we have to write off the entire $900 by reducing it from our current assets. So that is why we are crediting trade receivables, specifically the account of Wonder Corporation, which is stating that our current assets are going down by $900. Okay? All right. So let's look into part B, where we are required to prepare the allowance for impairment of trade receivables account. All right. So here we have got the usual ledger account 5-column format that you're used to. I've already prepared the outline, starting with the date in the first column, followed by the details in the second column. Then we have got the columns for debits and credits, and lastly, the net balance column. So we are given information for the 3 different financial years ending 31 March 2015, 2016, and 2017. This means that we will start this ledger account with 2014 1st of April, because the year that's ending 31 March 2015 would already start in the previous year in 1 April 2014, right? Okay, so on 1 April 2014, we are starting with an opening balance, which is the balance brought down of $580 credit. Where did we get this from? If you read additional information number 1, on 31st March 2014, the balance of the allowance for impairment of trade receivables account was $580. Now this ending balance at 31 March 2014 gets carried forward as the opening balance on 1 April 2014, which is basically the starting point of our ledger account. So at 1 April 2014, we have got an opening balance, which is the balance brought down of $580 credit. And it is credit because allowance for impairment by default should always have a credit opening balance, because it's a contra asset account, which records the reduction for a relevant asset account, and that is trade receivables. Okay? Then, at 31 March 2015, so you have to make sure your dates are in sequential order. Okay? So the next transaction is on 31 March 2015, where we know that Hulk House and Iron Yards, they owe $2,500 and $1,030 respectively. So these amounts are likely to be uncollectible, which means $2,500 and $1,030 combined gives us $3,530. And this should be the ending balance for our allowance for impairment of trade receivables, because there is a possibility that we may not be able to collect this amount from these credit customers. So at 31 March 2015, $3,530, which is the combined total for Hulk House and Iron Yards, is the balance we should show in our allowance for impairment of trade receivables account. So at 31 March 2015, we have got an ending balance of $3,530 credit based on the amounts that Hulk House and Iron Yards owe us, which is $2,500 plus $1,030. Now, as you can clearly see, from $580 credit at the beginning of 1 April 2014, we are ending with $3,530 credit at 31 March 2015, which is a massive or a substantial increase, right? This increase is due to the fact that we have got some impairment loss. So let's look into the relevant journal entry at 31 March 2015. So we understand our allowance is going up significantly from $580 at 1 April 2014 to $3,530 at 31 March 2015. And the difference between these two amounts is $2,950, which is the increase in allowance. Whenever our allowance for impairment of trade receivables increases, we have to credit it, because it's a contra asset account, and contra asset accounts, when they increase in value, we credit them. Okay? So credit allowance for impairment of trade receivables by $2,950, which is also referring to the fact that now there is more uncertainty in collecting the amount that our credit customers owe us. So this is a bad thing for the business, because obviously there's an increase in this uncertainty. And because it's a bad thing, we also have an expense account which is created, which is the impairment loss and trade receivables. And when expenses increase, we debit them. So that is why we are debiting the impairment loss on trade receivables by $2,950. Okay? So as you can understand, based on this journal entry, we are crediting the allowance for impairment of trade receivables by $2,950. This means the allowance for impairment of trade receivables ledger account will be credited by $2,950 at 31 March 2015, right? With the relevant account in the details column that we're using as a cross-reference being the expense account for impairment loss on trade receivables, okay? Now let's just make it simple. Whenever you experience an increase in allowance for impairment of trade receivables, we will have an expense account as well, and that account is known as an impairment loss on trade receivables, okay? Now, we are moving to the new financial year starting 1 April 2015, and we will have an opening balance of $3,530 credit, which is basically carried forward from previous financial year, okay? All right, so let's look into the events in this financial year. All right, so for this financial year, based on transaction number 2, on 10th of August 2015, Hulk House was declared bankrupt and its debt was written off. So let's understand the journal entry for this second additional information. So on the 10th of August 2015, we've got confirmation from Hulk House, who was originally our credit customer, that he got bankrupt. And if he got bankrupt, there's no chance of us recovering the amount that Hulk House originally owed us. How much did Hulk House owe us originally? $2,500, right? So now we are not going to receive this entire amount of $2,500. We know allowance for impairment of trade receivables is a contra asset account which we create to record the possible amount of uncollectible credit customer debts, right? So now that Hulk House is confirmed, this allowance for impairment of trade receivables should go down in value by $2,500, okay? So we will debit the allowance for impairment of trade receivables by $2,500, and at the same time, Hulk House should no longer owe us any money because it's bankrupt. Therefore, we have to reduce this current asset in our books, and when assets go down, we credit it. So that's why we are crediting the account for trade receivables, specifically Hulk House, by $2,500. So you can see that the allowance for impairment of trade receivables is being debited by $2,500. This means that the ledger account for allowance for impairment of trade receivables at 10 August 2015 is to be debited by $2,500, with the relevant account used in the details column being the trade receivables of Hulk account. Okay, so $2,500 debit gets deducted from the opening balance of $3,500 credit. Obviously, we are deducting it because we have credits and debits involved here, which is a mismatch. That leaves us with $1,030 as the difference, obviously with more credits because originally our credits were higher than the debits. All right, so for the year ending 31 March 2016, so this year started on 1 April 2015, so don't get confused here. So I've originally drawn a barrier here or a line just to make sure that you understand the different financial years that are involved. But if you are confused yourself during exam, you can just write 2015 again here so that you understand that all these events here relate to the financial year starting 1 April 2015 and ending 31 March 2016. So at 31 March 2016, we know that after Wonder Corporation has already confirmed everything, because we have already recorded, we are about to record this in the next financial year, all right? So we know that at 31 March 2016, Captain Limited and Wonder Corporation, they both owed us $2,240 plus $900, which is $3,140, right? So at 31 March 2016, this would be the likely amount of debts that we may not collect. So this should be the ending balance for allowance for impairment of trade receivables. So 3,140 credit is the ending balance for the allowance for impairment of trade receivables that we are recording here at 31 March 2016. Okay, so again, you can see that we are going from 1,030 credit from 10 August 2015 directly to 3,140 credit at 31 March 2016. This is again an increase in allowance for impairment of trade receivables, right? Obviously, because the jump is substantial from 1,030 to 3,140. So when there is an increase, we know that we have an expense account that is also created. So we will create an expense account which is impairment loss and trade receivables. That is what we will include as cross-reference in the details column. I'm just writing impairment loss and TR as short, but make sure you write the full form in the exam. And that amount that we will find out here is 2,110. So to go from 1,030 to 3,140, we need an additional 2,110 on the credit column. That way, when 1,030 credit gets added to 2,110 credit, we end up with a net balance of 3,140 credit at 31 March 2016. Okay, and this 3,140 ending balance for allowance for impairment of trade receivables is basically based on these likely amounts which we expected to not collect at 31 March 2016. All right. Excuse me. Now let's move to the next financial year starting 1 April 2016. All right, so maybe I just write 2016 here so you understand what's going on. So at 1 April 2016, we're starting with the opening balance of 3,140 credit, which is the closing balance from end of previous financial year. Okay? All right. And if you were to look at all the events that happened in chronological order, after 1 April 2016, we have got 1 October 2016. But 1 October 2016 simply refers to Captain Limited repaying all the debt. Therefore, there is no connection to allowance for impairment of trade receivables. Why? Because if Captain Limited is paying all the debt, what should be the journal entry? We debit the cash at bank account and then we credit the trade receivables account, right? Because when we receive the money from Captain, our bank balance goes up, which means assets go up, so therefore we debit the cash at bank account. But at the same time, he is no longer a credit customer as well. And we will also reduce the current assets, therefore we will credit his account, which is the trade receivables account, right? So there's no allowance involved here. So we can ignore this transaction from 1 October 2016. Therefore, the next event that takes place is simply when on 12 Jan 2017, when Wonder Corporation paid us 30% of what it used to owe us. Okay? So we understand that we have received $270 from Wonder Corporation, right? And $630 was not collected, which ended up reducing the balance for allowance for impairment of trade receivables, right? Why are we saying that it's reducing the balance for allowance for impairment of trade receivables? Because allowance for impairment of trade receivables is a contra asset account, which means when it increases, we credit it, and when it decreases, we debit it, okay? So we are debiting the allowance for impairment account. Therefore, on 12th of Jan 2017, $630 is to be shown on the debit column, with the relevant cross-reference being the trade receivables account for Wonder, specifically Wonder Corporation. Okay, so $630 debit gets deducted from 3,140 credit, which ends up with 2,510 credit as the net balance, because obviously we've got more credits than debits. Okay, all right. So after 12th of Jan 2017, the next thing is 31st of March 2017, where Spidey Blues owed us 1,180, and there is a possibility that we may not collect this, okay? So this means the ending balance for our allowance for impairment account should be 1,180 at 31 March 2017. So at 31 March 2017, the allowance for impairment account should have an ending balance of 1,180 credit. So as you can see, from previous balance at 12 Jan 2017 of 2,510, we are now going down to 1,180, right? So it's a good thing. So it's decreasing in value. So when it decreases in value, we don't have an expense, but rather a reversal, which is going to reduce our expenses. So let's look into the journal entry for that, okay? So I'll just write something here. So we know at 31 March 2017, okay, our allowance is going down from 2,510 to 1,180 based on the amount that Spidey Blues owed us only at 31 March 2017, okay? So 2,510 to 1,180. So there is a reduction here. And what's the amount of reduction? It's 1,330, right? Let me check if this is correct. So 2,330, 2,510. Yeah. So there is a reduction by 1,330. So this time there is a decrease in allowance, unlike what we're used to seeing so far. So when there's a decrease in allowance, should we debit or credit the allowance for impairment of trade receivables account? We should debit it, right? Because we know allowance for impairment of trade receivables is a contra asset account, which means by default it should have a credit opening balance, which means when it increases we credit them and when it increases we debit it. So allowance for impairment of trade receivables is to be debited by 1,330 because there's a reduction in allowance, as we understand. And at the same time, our expenses are going down in value. So the impairment loss of trade receivables, which is originally an expense account, is to now go down in value. And when expenses go down in value, we credit it. So this is like a reversal of impairment loss, okay? Which we show as a negative amount when we include it in our expenses in the statement of financial performance or the income statement. We don't add it with the total expenses. Rather, we would reduce our total expenses by 1,330 because obviously we have a good thing now due to the reduction in allowance. Okay? So based on this journal entry, 31 March 2017, we understand the allowance for impairment account is debited by 1,330. This means in the ledger account for allowance for impairment of trade receivables, at 31 March 2017, 1,330 is recorded on the debit column, and we will write impairment loss and trade receivables in the details column. So here 1,330 debit gets deducted from 2,510 credit because obviously there's a mismatch in credits and debits, which leaves us with an ending balance of 1,180 credit. This is the amount we have taken from 31 March 2017 as mentioned in the table for the amount that Spidey Blues used to owe us, okay? Now, this is what we carry forward on 1 April 2017 as the opening balance of 1,180 credit. Don't forget to carry forward this even after you finish your ledger account at 31 March 2017 because you've got an extra mark allocated for this, okay? All right, so I'll be uploading more questions on this topic and we'll be looking at more complications that could be involved with the preparation for the allowance for impairment of trade receivables. I've uploaded another video on this topic just a while ago, and in that video we are also studying the prudence accounting concept, which justifies how we show our assets and expenses in the financial statements after the allowance for impairment is considered, and also how we can prepare the extracts for these financial statements based on the impairment loss that we derive and the allowance that we have got, which is going to result in a different amount for net trade receivables compared to the gross amount that we originally work with, okay? With that being said, I'll conclude today's lesson and I'll see you in the next one.